Still seeing the stock up here almost 3%. Let's bring in Benjamin Dunbar. He's with Gerber Kawasaki. Ben, your thoughts on this number? We're paying a lot of attention right now to that subs number. What's getting your attention?
Yeah, the sub number is the most exciting part. Disney just nailed it on the transition to become a streaming company. And, we've seen the type of valuations people have given Netflix with their sub numbers. I mean, Disney coming in with this 26 million subs is huge. And yes, there's a lot of promotion. Yes, they need to keep people on the platform. But look, every single person that has kids, believe me, they're not getting rid of Disney Plus. So we love these numbers right here.
And so, Ben, I guess on a go-forward basis then, thinking about how long the rope is here for Disney, if you will, right? Are they going to get 3 years, 5 years to focus on growing that base versus trying to monetize that base? What's your expectation in terms of how investors are going to see this transition? Obviously, very exciting right now. We're in the early innings of where Disney goes as they reinvent themselves. But what's your expectation on how long it takes before we get a sense of what the new Disney really looks like?
Totally. Well, content is king right now, and we're seeing that with all the different companies. And Disney owns so much content, is going to be continuously pulling content from Netflix. And so this subscriber number, this is just the beginning. And the fact that you have this full integration with Hulu that's going to be happening. Obviously, sports aren't going away. We had an exciting Super Bowl. And so Disney owns so much content. And so they're doing really well with all this content. I mean, you got Star Wars, you got Frozen, you're hitting all these different age demographics. And so it's really exciting. And, you include the theme parks, you include Galaxy Edge. Mm-hmm. They're just connecting everyone together with all of, with the park, with the hotels, with the streaming services. And so we think this is just the beginning of Disney. This is a whole new chapter, almost a whole new book for Disney, and we're confident they're going to execute here. And you look at the valuation of Netflix, and you look at the valuation of Disney, and you can't not be excited about Disney here.
Hey, Ben, Brian Chung here. So I'm wondering, this wasn't a massive beat on the top line when you look at revenue, $28.86 billion, of just a notch above the street's estimates of $20.81. Obviously, no one's expecting the Disney Plus launch to already be reflected in this quarter's earnings. But when would you expect to see some of that top line growth from that business? Is it in the next quarter? Is it Q2, Q3, Q4, even longer than that?
Great question. So not really expecting it over the next couple quarters because you do have a lot of promotion that's going on. They're just trying to get people on the platform. We've seen it with Netflix, how much they're able to raise prices and people don't really cancel their subscription. So the story actually isn't even the next quarter or the quarter after that. The story is really next year and the year after that. And so they're going to bring these subs in. We're actually happy to see good earnings numbers. We're happy to see basically in line on revenue. But those numbers are going to start to pay off a lot longer. And so we may have to be a patient investor here for the next few quarters. But it's a really exciting story for Disney.
Benjamin Dunbar, Gerber Kawasaki, managing partner. Thank you so much for joining us to break down these Disney numbers.